When a company hires new workers, it's the employer's responsibility to classify these workers correctly. The IRS doesn't want the employers to guess, though. For that reason, the IRS created a test that looks at 3 key areas. This test is known as the Common Law Test and is used for federal taxation purposes. Other tests may be used for other federal purposes and by states. The IRS Common Law Test looks at the behavioral control, the financial control, and the relationship between the company and the worker. However, it is important to consider all factors, since no one fact will determine whether a worker is an employee or an independent contractor. When examining behavioral control, ask yourself, does the company tell the worker when and where to work, or how the work is to be performed? If so, then they have behavioral control, and you're more likely to be considered an employee. Financial control comes down to who's taking the financial risks. On one side, independent contractors often take financial risks, meaning that they can profit or sustain a loss. By contrast, an employer is required by law to pay employees for the time that they worked. Relationship is the final element of the federal common law test used by the IRS. This element requires that the employer examine the relationship between the worker and the business, and includes factors such as contracts between the parties, benefits offered to the worker, permanency of the relationship, and whether services provided by the worker are a key aspect of the business.
James was hired by the company Moon Microchip to repave their parking lot. They want the job done over the weekend to minimize disruption to the business. Do these facts weigh in favor of James being an employee or an independent contractor? The fact that the job must be done on the weekend does not in itself mean that Moon Microchips has control over when the work is done. James agreed to this stipulation, and he retains control over which days and hours he will work over the weekend. James also has control over how the work will be done. Moon Microchips isn't dictating what type of asphalt to use, is not supplying these materials, is not telling James the temperature to heat the asphalt to, and did not train James on how to repave their parking lot. The company's control is limited to the outcome. James is in control of how to reach that outcome. These facts weigh in favor of James being an independent contractor. Moon Microchips will be paying James a contracted amount to complete the job, regardless of the time and expenses James has. The materials needed, the equipment needed, hiring additional help needed, all these expenses are James' responsibility. If these costs vary from his original estimate, James could potentially realize a financial loss on the job. Since James can realize a profit or loss from the job, he has financial control, and these facts weigh in favor of James being an independent contractor. Withholding income employment taxes. When James is done repaving the parking lot, Moon Microchips will cut him a check and will not withhold employment taxes from his payment. However, when a worker is an employee of the company, there are employment tax withholding requirements that must be followed. The employer is responsible for withholding taxes from employee wages, and the employer must pay employment taxes as well. James doesn't get out of paying taxes, however. He is responsible for paying the taxes for himself and his business.
It is critical that your employer correctly identifies you as an employee or an independent contractor. If they don't, they could be faced with penalties, especially if they misclassified you intentionally. Why do you think an employer would intentionally misclassify an employee to be an independent contractor?
It is important that the employee is classified accurately from the start, since this will impact the payment they receive. Presuming you have received a paycheck at some point in your life, were taxes taken out. Assuming you were paid correctly, as an employee, income and employment taxes should be withheld. As an independent contractor, income and employment taxes generally should not be withheld from your contracted payment. As you can see in this expense comparison, the financial obligations involved in having an employee are greater than having contractors. The employer has to pay employment taxes, they have to buy workers' compensation insurance, and in some cases, they must provide benefits. All of this adds up, and the IRS knows it. Therefore, Employee classification is frequently the subject of IRS audits and can result in heavy penalties being assessed against an employer.
To address the issue of misclassification, many states employ the ABC test, which considers 3 criteria for classifying a worker as an independent contractor. Although the interpretation of the ABC test may vary from state to state, it generally encompasses the following elements. A. The worker can perform their job without being directed or controlled by the employer. B. The services provided by the worker are carried out away from the employer's usual business operations or location. C. The worker is regularly involved in an independently established trade, occupation, profession, or business that aligns with the nature of the service they are offering. Additionally, individual states may have distinct regulations concerning independent contractors, covering areas such as unemployment compensation, workers' compensation, and state tax collection. State-level departments of labor can furnish specific information related to each state's policies on these matters. For now, determining worker classification will remain a complex issue. To minimize exposure to misclassification liability, organizations should follow federal and state guidelines as closely as possible, keep documents on file that support their decision to classify a worker as an independent contractor, and use a written contract in all independent contractor engagements.